Well, good afternoon, everybody. Welcome to it is February, February 1st, February 1st edition of Bull Sessions. My name is Mark Robertson. I am joined here by Ken Kavula. I trust it's actually toasty up in the mid-Michigan area also, Ken. We're over 40 degrees
I
here.
think, I don't know if we're quite that warm, Mark, but we are over freezing. So right before the calm before the storm right now.
Yeah,
Birds are out everywhere right now doing what they can. Squirrels out. I think they sense there's something coming real good. They're calling us for 16 or more inches up here.
yeah, and Boston didn't get the 4 feet that they were theoretically supposed to get, but they did get 2 feet of snow.
Well, if we
So,
get the 16 inches, that'll be the biggest snowfall this year. So,
yeah, by quite a bit. So,
yeah.
and Kim, now that you're no longer in Evansville much of the time, you probably missed those snowstorms.
I'll pass.
Spoiled.
Well, there is something to be said for the changing of the seasons, because I have to admit that I got to wear sweatshirts in the last week, and I haven't been able to do those for a while. So it was kind of fun, sweatpants and sweatshirts, nice comfy clothes. That was nice.
Cool. It's a staple up here, of course. All right, so let's go ahead and get underway. We are going to feature groundhog stuff. I know a lot of you guys are probably sick of the groundhog, but I'm not. And that is Ken and I in our toques. That is an NFT that is out there on the market. We've already received one bid for one share of our delics. So the bidding war has started, Ken, and we'll see maybe we'll be instant millionaires if somebody out there wants to drop a stack of Benjamins on us.
Not at one share of Artilex at a time, Mark. So,
Well, I mean, the auction could heat up.
okay, all right.
I would continue to hold out hope. But part of the session today will be to take a kind of look around at the groundhog status and some shopping. Many of you have been shopping and turning in your selections for the 16th annual challenge, even as the 15th year comes to a close. We will check in with Jim Gramer and Abby Cohen. And the Tigers just simply there to remind everybody that this is the first day of the year of the Tiger. And hopefully that bodes well for groundhog portfolios, because we certainly can do better than we did this year. All right, let's go ahead and get the legal paperwork out of the way first. This is an educational demonstration where no investment recommendation whatsoever is intended. Everything we do here is for illustration and demonstration, specifically the methods, techniques, philosophies, and approaches of the modern investment club movement as championed by either Manifest Investing, our interpretation of that philosophy, and or the National Association of Investors, also known as Better Investing. So you're going to hear opinions from us. Please do your own homework. If we hold a particular company that we're talking about in our portfolios, we'll try to remember to disclose that. We do a monthly program known as the Roundtable. It's on the last Tuesday of every month, 8:30 Eastern Time. We've been doing it for approximately 12 years, generating actionable ideas to share over that time frame with a fairly decent level of success. If you'd like to be added to a reminder list for that event, please send an email to nkavula1@comcast.net. If you have any follow-ups to this session or suggestions for future topics, my email address and Ken's email address are at the bottom of this page. Anything you'd like?
I'm going to jump in, Mark, because the month of February is an exception for the roundtable, and the February roundtable will actually be held on March 1st, the very first Tuesday in March. So those notices are going to go out to remind everybody. So if you're on the list, they've gone through one of the sieves already, and they should be getting out right now to all of you. March 1st is the next roundtable, and it'll be designated the February roundtable, even though it's on the first day of March.
And I don't know if that is the Academy Awards weekend or not, but it is our black tie, red carpet affair. And we have a lot of fun with it. What's kind of interesting is we'll have 2 roundtables in January, none in February, and then not one till March. So, oh well, the vagaries of the calendar, I guess. All right, so today's theme will center on the groundhog a little bit, a quick update on best small companies. We will return to those other topics probably starting next week, and perhaps even discussing inflation at some point. I think it's probable, especially since Abby Cohen's going to make a comment about it as we go through the slides here today. All right, just a quick look at, I warned you that this was going to happen. On the far right, the value line median appreciation projection did take an almost 2 percentage point hike up. It's actually returning to long-term norms. The long-term average for the value line median appreciation projection, again, that's basically the average forecast ex dividends of all the companies in the value line standard edition. And back in that 10 to 11% range is, again, pretty close to a fairly reasonably or fair valued situation. All right, so let's keep pressing on. Here's a quick look at our best small companies. This is kind of like a yo-yo. We've fallen back behind again. Small companies have been absolutely hammered, and in fact, some of the smaller, extremely fast-growing, lower quality companies have just been massacred in the last 2 or 3 months. There just has to be some awesome opportunity in there for a promising company that's hiding its spots right now. But we're feeling the effects of that a little bit. Our best small companies have taken it on the chin a little bit. You see Fulgent and Green Tree Hospitality are down a little bit towards the bottom of this roster. We are thankful for Pachira Biosciences, and there's a number of companies up at the top. A number of you have chosen MKS instruments for your groundhog portfolios, and there's a few others there also. Axos, Metafast, and we'll see you in a few minutes, a few others. Few beer drinkers out there with Boston beer also. But anything here nudge you at all, Ken, at this point?
I still like a number of companies on this list, Mark. I've been looking pretty carefully again at some of these car dealerships. I'm fascinated by the ability of them to keep their sales moving even through that fourth quarter that we just finished at the end of 2021. Obviously, they have pricing power, and for a lot of these people that either sell used cars or sell completely sets of new cars, they've been able to apply that pricing power even with the decreased volume, the decreased inventory that they've had on their lots.
Mm-hmm.
So I'm taking a serious look at that particular. I know we have one on our list down here, Car Gurus, about halfway down the list. Looks like it's running pretty even with the market right now. What is that, a 1% relative return? Yeah,
1%.
Negative 1%. Yeah.
Yeah, and I'm actually not too concerned about Green Tree Hospitality at the bottom. I think it's symptomatic of what China's going through right now, and an already weak condition made worse by the fact that they've really locked things down in advance of the Olympics, and it's probably a temporary condition for that sort of thing. So, all right, so we'll just keep an eye on those. We'll probably run some analysis on Green Tree to make sure that analyst estimates haven't fallen off the table, but I don't think they have, at least not yet. All right, here's a reminder that we are tomorrow evening, actually the next morning, beginning the 16th annual challenge. Many of you have already submitted your stock selections to us. We've been running this for 16 years, and we just have a lot of fun. We'll be crowning a new champion and launching the next contest over the next couple of days. I love the Occam's razor notion. The Hugh McManus quote is timeless, and it has an infinite shelf life. And I think this contest really does demonstrate. Ken and I have talked about this a number of times. There's not a whole lot of fence busting, swinging going on with eyes closed, and the long-term performance that really underscores that. It's not just really going for a championship year by year, although it certainly is pretty good stuff. But we'll go ahead and keep it simple. Just as a reminder, in your deck is the ground rules. No changes. Everybody gets a million. Those are like a cryptocurrency, Groundhog dollars. I think Ken and I need to go to Punxsutawney to spend a few Groundhog dollars.
Back to that trip again. Oh, all right.
It's unavoidable. But you can see that the rules are there. We do not permit stocks under $1, so our Ardelyx is not eligible. Unless one of you out there, and I've invited somebody to do this, to make a block trade for Ardelyx at $1 tomorrow evening, right as the market closes. But if that doesn't happen, it won't be eligible for this year's contest. And it actually was responsible for considerable carnage in this year's results, dropping down as it has. All right, so here's a look at the current standings. With 1 day, 1.5 days of trading left to go, and Ruth is back on top. And in fact, I checked just before we came online, she's actually widened her lead to about a percentage point and a half over Mr. Buffett. So Ruth might hang on. And Nick and Lisa and Ty has actually moved into third or fourth place, so they're all right in it also. As we said last week, there is no truth to the rumor that I started all this market volatility just to jumble these results a little bit. That was an ugly rumor started by somebody, probably down in Houston. But some pretty good results. And Ken, I think you've got reason to celebrate there with your Mid-Michigan Model Club. And your name is actually on this list too, down at 22nd. Sorry, are you ready for your victory lap?
Well, I would just like to stay above the yellow for the Mid-Michigan Model Club and for my personal portfolio. That was my goal, was to just beat the market and to stay on the leaderboard. So I've been able to do that. I've been considerably subdued in this particular contest for the last 3 or 4 years, and it's paid to my benefit. I've done much better picking just known stocks with a definite method to my madness, and so I'm going to stick with my method, and I'm even going to demonstrate it today for you folks that are out there in the audience.
Yeah, and like we were hinting at earlier, look at the number of bolded entries there. On that top 40, there's quite a few clubs and groups of investors. Bower City, wow, Susan Michelik and her group there in southern Wisconsin. They are always on the leaderboard. And in fact, one of these days I'm going to go back and demonstrate. I think they've been in the top 20 almost every year of the contest. So it's kind of fascinating to see that sort of thing happening. And they use a method or a technique very similar to what Ken's about to demonstrate for his selections for the 16th annual contest. I do want to again reiterate that I started down around 120th about 4 or 5 months ago, and I'm up to like 60th. So you all are just beneficiaries of me running out of time. So
or audacity, Mark, one of the two. I'm not sure.
I never run out of audacity, Ken. All right, so it was a tough year. We hope to see better performance out of everybody next year. That's been the norm. We have a track record of wrecking the stock market for the last 4 years, so I guess we had one of these coming. But only 18% of people participating have managed to top the market. That's by far lower than it's been for quite some time. And Kathy Wood had a year that kind of embodied people who were swinging for the fences and going for the high technology, high beta, high growth rate stocks, and she's just had a really rough year. And she's coming down off of a huge winning streak also. So it's just a reminder that the market can be extremely humiliating also. All right, so we'll just cheer on Ruth, Nick, Lisa, Ty, and the people at the top of the list. Len Douglas made it back into the top 10 and just kind of cranking away. Len's been near the top 10 all year long. And wish everybody luck in these last day and a half of trading. All right. Speaking of swinging for the fences, although I'm not going to accuse this participant of that, I'm just going to say that they made some pretty aggressive selections a year ago. And this is the type of year that some people had with holdings in Ardelyx and a few others. But it's pretty tough when you're faced with a year like this, and Kathy Wood's year has looked kind of like this within the ARC Innovation Exchange Traded Fund. So the great humiliator, the stock market, I can't remember who actually referred to it. It's either Phil Fisher or one of the great legendary investors referred to the market as the great humiliator. Could have even been Buffett, I guess. And so definitely doling out some humiliation.
So Mark, those 6 stocks were actually somebody's entry last year. Is that what this is?
Yes, and in fact, the individual was poised to take over the all-time lead on the Hall of Fame standings we'll be looking at in a minute, and this prevented that. So it's just a matter of getting back on the horse for a very talented stock picker in this case. All right, so here's a look at, I don't think we've actually shown this very often. We do keep track of some of those celebrities. I refer to it as the Borough of Fame or Shame. This is the kind of the top of the crop here. If I added in another 20 or 40 mutual funds or exchange traded funds, most of them would be dripping in red ink. So you're actually seeing some at the very, very top. Kathy Wood, for all of the travails of 2021, 2022 so far, she still has got quite a good long-term track record, beating the stock market by 6 or 7 percentage points. And the roundtable is there just for reference. We actually have about a 4 percentage point advantage to the market. And just some other ones there. I mean, Warren Buffett is the top celebrity this year, but notice that his longer term performance over the 15-year period is basically right at the market, 9.6 versus 9.4. Kramer's had some tough years. Get a kick out of watching Ken Hebner, because he's actually won the celebrity component of this a few times, and he is one of the hottest and coldest of the mutual fund managers out there. But I do like to point out Eddie Elfenbein, fairly consistent with his Crossing Wall Street stuff that he does. The one that has really disappointed me this year, because we talk about him a lot, is Brown Small Company. And they've had an exceptionally tough year for that mutual fund. And be kind of fascinated to see how they do this year. It's one of the top performing small company mutual funds out there. And they really hit a little bit more than a speed bump. And anything jump off the page here, Ken?
Well, maybe they'll go back and open up that fund, Mark,
Been waiting for it. And
yeah,
it would be nice. I think I would, well, I promise if they open that fund up, you'll all hear about it at Manifest. And I do recommend having a position in that fund. And it'll be interesting to see if they have a decent recovery.
Yeah, what led Buffett to do so well this year in this down year? That's more than twice his lifetime average.
Well, I think the position in, again, keep in mind, and it's something I think they don't spend enough time talking about. It says Warren Buffett, Berkshire Hathaway, but it's basically the decisions, the primary decisions, as I understand it, are being made by a team now. The Todd Coombs and Todd Weschler and Ajit. I think Warren has less of an active influence than he has in the past. I think that's a fair statement. And they probably don't make quite enough of a deal about that. Buffett, the Buffett that I believe I understood 5 to 10 years ago, would probably not have considered Apple in the portfolio. And Apple is absolutely crushing it for Berkshire Hathaway right now as a holding. So I think that's behind a lot of it, Ken. Those type of companies.
It's got a lot of the Liberty Cirrus of the Liberty stocks.
Yes. So some interesting stuff there. We'll be watching. Like I said, we're welcoming back Jim Cramer this year. I don't know how he got left off last year, but it's always kind of fun to follow Jim.
Yeah. Mark, when we're looking at a lot of these things, we're looking at proxies. These aren't actual picks that these people have made and sent to you. Warren Buffett, for example, you're just measuring the performance of Berkshire Hathaway year to year. Is that correct?
Right. So for Warren Buffett, it is Berkshire Hathaway. For Brown Small Company, it is the actual mutual fund itself. Eddie Elfenbein, it is the 20 stocks that are in the CWS ETF. Kathy Wood is obviously the ETF also. But in the case of Morningstar, some of the Motley Fool selections, Jim Cramer, it's actual selections. So a couple of them there are actual stock selections too. And we'll take a look at the ones that Cramer actually featured recently, and we'll be this year's pick. Here's a recent article from Morningstar that we'll probably dub in for their long-term stock selections, or whatever they call their ultimate stock pickers. Pretty decent article, talked about some companies that have been on our radar screen. And this is the first of a few that we're going to show you that there's still quite a financial / banking presence in these lists. And Ken has talked about ASML quite a bit. Do you want to give a quick rundown on that particular company, Ken?
Yeah, this is a Dutch company, and they do lithography on silicon chips, and that sounds pretty dull and pretty boring until you listen to some of the CEOs from chip makers tell you how important ASML is. I just listened to the CEO from Intel talk about a new chip manufacturing plant they're going to build near where I grew up in northeastern Ohio. And the gentleman from Intel, the CEO from Intel, made it quite clear that a lot of what they're doing today and a lot of the ability to let Moore's law continue to be, and I'll go back to that in just a second, has to do with ASML, that anybody doing complicated chips anywhere in the world and doing them to the degree of tens and hundreds of thousands of transistors on a single chip has to go through this process that ASML calls silicon lithography, and it's basically printing, but it's printing transistors on a very small piece of silicon. It's a three-dimensional chip when they finish, and they're able to increase the density of the transistors, not 10 or 100 fold, but in some cases 1,000 or even 10,000 fold. It's mind-boggling. Moore's law was put together by a former chairman of Intel, and he said that the amount of information you could put on a single silicon chip was going to rise by a factor of, and then you fill in the blank depending on where we are in history. But I think the original statement was a factor of 10, maybe it was a factor of 100. And he said that was going to happen every so often into the foreseeable future. The chairman of Intel thinks that this process coming from ASML is going to allow Moore's law to function well into the late 2030s. And so those folks that were proclaiming Moore's law is dead need to take another look at the processes that are allowing them to make more and more complicated chips handling more and more transistors on a single tiny little piece of silicon. A very, very interesting company. I will admit to having holdings in ASML and have been quite happy with the return from that relatively small company.
And I'm probably going to flip a coin between ASML and Micron when it comes to my Groundhog picks. I like the way both of them are positioned fairly well. But I want, does Buffett still hold Wells Fargo? Kim, do you know if that's the case?
I think he was selling it off.
Okay, because
Let me see if I can look it up real quick.
yeah,
I own Wells Fargo, Mark, and my understanding is that he has sold off a considerable part of it, but he still has considerable holdings in Wells Fargo.
well,
That he cut way back on it, but he still holds part of it.
well, he was certainly a Wells Fargo advocate in years gone by, and the story of him picking that up for like 10 cents on the dollar back in the early 1990s is a good lesson too. So,
Well, you could have picked up Wells Fargo for not a whole lot of cash just 5 years ago, also, and done quite well in this particular bank stock. I mean, it was the only big bank trading at significant discounts. A lot of the big banks were trading at discounts to their value, but Wells was trading at significant discounts to the value. Now, granted, they were under a lot of rules and regulations coming from the regulatory agencies and from Congress, but when it's all said and done, you could have made some real nice profit in Wells Fargo.
And of course, there was that old Irish saying that came from the stage in Chicago at a national convention years ago that Mr. McManus wanted to own a bank. And the audience nearly lost consciousness. And that worked out pretty well with Hugh. And in that case, it became Bank of America manifesting itself. All right.
Yep. Michael is telling us that he thinks that Buffett had liquidated most of his Wells position. And I agree with that, but I still think he does hold some. And we'd have to Kim is doing some looking maybe to give us a definitive answer there.
I'm sure
yeah, he currently has 675,000 shares, which is like 1%.
Okay.
He's reduced it quite a bit because that used to be like one of his top 5, I believe. So he's reduced it quite a bit.
Okay. All right. So let's talk Cramer for a minute. Here's a fairly recent article from Jim Cramer. So there is no Jim Cramer fund that we can use as a proxy, as Ken was talking a few minutes ago. So we actually use an article like this to be his selections for the coming year. And it's a fairly interesting group of companies. Again, I point to the presence of those mega financials, at least in these guys' thinking as to what might be rewarding or profitable over the next year or so, and they continue to be there. This one seems a little bit more erratic to me, a little bit less promising, but some interesting picks there. All right, so let's take a quick look at Abby Joseph Cohen. She's been part of the roundtable for years. She's been a celebrity champion at least once, if not twice. She tends to pick more established companies over the years. And you can see her 6 selections during this year's roundtable are right there. Fairly conventional. Morningstar tends to disagree with her a little bit, but the analyst consensus is strong there. I don't think she's still at Goldman, maybe just of counsel to Goldman, but she is still at Columbia University, as is captured there in that quote. And she mentions interest rates, Ken. So maybe that's my final nudge into reading my inflation homework.
I just I'm amazed at the panic in people's voices when they talk about a 0.25% interest rate hike, and I'm amazed at the rush to try to interpret the tea leaves that are spilled at these press conferences by the Federal Reserve Chairman. I mean, we're hearing everything from 3 hikes to as many as 8 hikes in a year, and we're hearing that they're going to do all that, and they're going to reduce the balance sheet significantly. And some of these rate hikes might be 0.5%. And when you listen very carefully to the people that are making all these predictions, nobody has any data of any kind to back up. It just seems to me that anybody can get on TV on the CNBC channel, at least right now, and make a prediction, and they'll get some airtime to air that prediction. It's disconcerting as far as I'm concerned.
Well, that channel is financial education, or no, entertainment. So the more people who go up there, the more people who talk, the more people who give varying views, it helps raise volatility and questions. And I think sometimes it's just to fill the air with a whole bunch of craziness.
Yeah, the 24/7 stuff, and Ken has talked about this a number of times in the past, has just really compromised the whole picture as far as I'm concerned.
I listened to an analyst yesterday, Mark, spend her 90 seconds. That's what you get when you make a pitch on most of these different programs. She did 90 seconds, and basically we could have condensed the whole thing to the words that the stock market fluctuates. That basically was the point she was making, that stocks go up and stocks go down. So I guess you have to treat it as entertainment, and you have to remind yourself that somewhere within all that rhetoric lies the truth, but sorting it out is as impossible as it sounds.
Well, one of the things I do like about Barron's is they do keep track of the individuals that participate, in the roundtable and some of the features in the magazines. Only maybe the Wall Street Journal to some extent, but most of them don't keep track of, how these pundits do over time. And it's really, it's pretty telling. All right, speaking of pundits, let's talk about our pundits. And what I've done here is put together we have over 50 submissions already, and they continue to keep coming in here over the next day or so. What you're looking at here is I've taken the submissions that we've received already, and what I did is I used the end of last year. So these are year-to-date values. So what we're kind of looking at is the people who are participating that are more of a momentum slant or, positive inertia type situation. The tickers are listed on the right, so you can see there's a few Amazons in there, a couple Boston Beers, Kim's LGI Homes is in there a few times, T. Rowe Price, but you just kind of get a feel. A lot of Apple, a lot of Google. Anything else that you notice on there, Ken?
Well, I thought I noticed quite a bit of Facebook too, Mark, Meta platforms. I might be wrong, but I thought when I glanced at this
yeah, that's probably on the
half an
next
hour or so, there was a lot of FB in there.
Yeah, because Facebook has
not.
been down in price, so it's probably more on the next page. But
Yep.
Nobody's picked 20 stocks yet. So these slides are in your deck, so you can go and look at these. Yeah, there's a few more Facebooks on this page, Ken.
Okay. Yep.
But you see the Amazons.
I'm surprised to see how many PayPals.
There are quite a few PayPals. Oh, and the other one that kind of surprised me was the number of Ollies.
What strikes me, Mark, is that so many of these portfolios are making no attempt at all to swing for the fence. They're made up of 5 or 6 or 7 names that are known to our community, or at least all of them but one might be known to the community, and they're reasonable. They're the same reasonable kind of stocks that we might put into a real portfolio for the most part. I don't see a lot of, like I said, swing for the fence kind of things going on in a lot of these portfolios.
Yeah, the one exception that I can point out, and I mean this affectionately, Rob Martins sent me a note and said that it's not the year of the tiger, it's the year of the cyber hog. And his 6 selections are pretty high-charged technology stocks, so do a sign of the cross and hope that that works out okay for him. But good, he could.
I see Octa and Fortinet in there. Yeah, okay.
Yeah, so his selections are pretty. Fortinet really supported a lot of the top people at the top of the leaderboard this year. So what you're looking at here is the people that are more likely to do more of a value or a deeper value type shopping. These are These are companies that have been down significantly since year to date. So good, clean fun. The average number of selections is not that different from previous years, right around 8. And like I say, nobody's picked 20 yet. That wouldn't break my heart if that didn't happen. Okay. Speaking of the long-term standings, and I just wanted to point out a few people and people that I pay a lot of attention to. I pay attention to all of you, but I'm always really impressed. I didn't circle them because I'm kind of trying to look away from them. You know how like when you're, in a sporting event, you don't want to make eye contact. The Bower City Club there on the far right is among our all-time leading clubs. Susan Michelik and her group out of, again, as we said earlier, Janesville, Wisconsin. So they're running right there near the top of the leaderboard for 14 years. And I did go down a little bit on the relative return. Ken went up a little bit, so he's trying to sneak up on me on the far right. And but we are joined in the all-time standings by Marie Frank and Gail Goldstein this year. We're going to see a couple other entries in there. I think Herb's grandkids, the I can't remember the name of the club now off the top of my head.
Is it the Cool Kids?
Yeah. I think they're going to make this list also when the final numbers are in for this year. The Cool Kids out of Traverse City, and Marie Frank has been pretty prominent in our best small company efforts over the last several years. So it's kind of fun to see her coming around here. And then I am going to single out Bonnie and Ellen. They've been in the contest the most number of years, and very consistent results from Bonnie and Ellen over the years. So it's always kind of interesting to see what they're looking at doing. And not to pick on Hugh, but Hugh and I were basically tied going into this year. So he had a rough year with his biotech stocks. You can see that he drifted down here. And Nick New York DiVirgilio, I was wondering how he was doing. He is back on the Hall of Fame board, thanks to his top of the leaderboard finish this year. So again, I like to kind of keep an eye on what these people are picking. A few more will be coming in here over the next day or so, and it's kind of fun to look. One of the places that you can look is right on the Groundhog Challenge page in the forum. There's Ellen and Bonnie's selections. You see the Googles, you see the MKSI, and then you see the Cy Lynch Bandwagon Maximus selection. Cy has had a great year. I see that Bonnie also picked ASML and Facebook. So it's just kind of interesting to notice what these people are pursuing. All right. So what we thought we would do is give you a look behind the scenes of how Ken actually makes his selections. So Ken, I think we need to switch the screen to you. And he's offered.
Thanks, Mark. And can you see it now?
Yep, it's good for me.
Okay. And what I've done, folks, is I've gone to dashboards, and then we have I belong to 3 clubs that have club subscriptions to manifest. So I've pulled up the Wolves club description, and I'm going to look at the Wolves portfolio right here, and I'm going to sort it by par. And I've done this with all of the clubs that I belong to with their permission, of course. And that's how our entries are placed into the Groundhog competition. For my personal entry into the Groundhog competition, I use a combination of my wife's IRA and my IRA that I manage. I manage both of them. And but the process is exactly the same, and I start with a dashboard and I sort it by par, and then I go down and I look for pars around 10% Actually, there's a natural break in my mind right here on these pars in the wolves between Raymond James at 11.7% par and Dollar General at 10.2% par, right down in here. So I might even end this list with Raymond James or Gentex, because those are all the kinds of stocks that I would want to put into the contest. Notice that some of them don't have any holdings. Pterodyne, for example, Monster Beverage, no holdings, zeros next to them, zero next to Raymond James as well. And that just means those are stocks that I'd like to own, or that my club would like to own, but we didn't have enough cash at the present time. Well, once I sorted them, then I decided how many stocks I wanted to put into the contest. And basically, I've been keeping 8, 9, or 10, depending on what the bottom looks like. So there's my entry for Mark. It starts with Facebook as number 1, Maximus number 2, Essent number 3. I don't like Pterodyne. I'm sorry. And I will argue with my club if it gets to the place where we're going to buy any of it. So I skipped Pterodyne and then went to Axos, Universal Forest Products, Regeneron, Monster Beverage, D.R. Horton, Domino's Pizza, Alphabet, and Universal Display. And I think that if you count down, that gives me maybe 10 in that portfolio. I looked at any stocks that might be a little bit repetitive in the entries that I'm putting in there. And if I find something that's being repeated a number of times, then of course I make sure that I try not to repeat it in all of my entries. That just makes them all look the same. So I'll do a little bit of crossing out. I'm not sure that this is the portfolio that will finally contain Maximus, because I have Maximus in 1, 2, 3 of the 5 portfolios I'm going to submit right now. But all in all, it's a very simple process. I've already vetted these stocks. I already like them, or I know which ones I don't like if they're in club situations. And it makes the process fairly easy for me to have to deal with. And most importantly, it's been a very successful kind of methodology for the last 3 or 4 years. I've been moving up that leaderboard up into the plus. I'm up to about +2.5, +3 now, and I've been moving up on a pretty consistent basis. It takes a long time to move very far in an upward direction when you have 14 or 15 years of data behind you, but I have been moving in the right direction. I like this method, and it keeps me from trying to swing for the fences. That's all there is to it, Mark.
Okay. Go ahead and switch back to me. I can. Okay, thanks, Ken. I think I'll demonstrate when we get done here the Kurt Kowitz method, which takes about 15 seconds to make his 5 picks using a very similar type strategy. Okay, see my screen okay?
I can.
All right, here's mine. I do a very similar thing where I will just basically use the manifest database to go in and shop for certain things. I went shopping for, first of all, a low, very, very low relative strength index stock that I could actually warm up to. Anything below 20 is particularly compelling. In this case, it's Makita. And yeah, international company of tools and hand tools, power tools, that type of stuff. If you take a look at an analysis of it, it's actually fairly steady, obviously somewhat impacted by the global recession, but if a recovery does happen, it's also an infrastructure type concept. But you can see the Morningstar likes it. So does the analyst consensus. All of these are pretty good with the exception of Hibbett. But my first three are pretty much automatic. Semler is a company that's in healthcare optimization, and they actually have a product or a process that does a blood. It's actually a cardiovascular test that can be performed in offices and homes, I believe. And a company that I do want to know a little bit more about, but I'm going to go ahead and add that one just simply on the speculative upside of that 1 year triple-digit expected return potential. The projected return is good. The projected return on value is good. So I'm kind of impressed with the low price to fair value at Morningstar and the analyst consensus. So that's kind of my swing for the fences moment here. Steel Dynamics, again, a company that we've covered at Manifest here recently, stands to benefit from infrastructure. And then for the fourth stock, I'm only going to pick 5. The fourth one, it's going to come down to a battle of Micron versus ASML, as we were talking a few minutes ago. I think they're both fairly well positioned. I'll have not both, but one or the other. And then I was going to go with Hibbett, basically taking the same line of thinking as Malibu Boats and Ken's Marine Max presentation recently on the power of recreation. And Hibbett is an outfitter that's a sporting good retailer. And the premise being, maybe if you can't afford to buy one of those outboards, you might be in the market for a kayak. And they sell those at Hibbett. But I am a little bit troubled by the analyst consensus estimate for fair value. And the analyst consensus is that they think it's overvalued significantly. So I'll scratch my head over that one and maybe not select Hibbett. And then I've got the 2 home builders there that may take that 5th position. It's kind of squared off against each other. Pretty even fight. Maybe a little bit more of advantage when it comes to the return forecast with Green Brick. But Green Brick is one of our best small companies and might lean that way. But my 5 selections are there somewhere. And if I were to decide not to go with any of these, I probably would just go with the ETF, the ARC Innovation ETF, because they just got crushed last year, and there's a lot of really good companies, innovative companies in that, and I think they'll ultimately recover. No one knows if it will be within the next calendar year or not, but might go that route also. Any comments or questions, Ken?
No, we're staying up to date here.
Okay. Well, here's our reminder that we do archive all of these sessions, including the bull sessions, the roundtables, and some of the monthly expected returns, as well as our successful investing conferences that are right down the middle here. These 5 sessions, you can find them on the YouTube page. Just go to YouTube, search for Manifest Investing. You can throw a roundtable in there if you want. You will find this page, and you can actually scroll through and check that stuff out. If you subscribe, you basically are added to the list and notified anytime we add another session or content to this page. All right. So a couple pictures to close things out. I love this one. Ellen Burmeister is on a tour of South America, and this happens to be a view in Argentina. And she's actually on her way to Antarctica. She's a volunteer with, I'm pretty sure, the Sacramento chapter for Better Investing. A lot of friends out there in California. Ken and I have been out there a number of times. And I just thought this picture that she had sent back is, I'll tell you, it's really, really nice when it's -5 degrees here. All right, and then our last slide to remind us that it is time to get out there and pick some winning stocks. You're the tiger. I just thought that National Geographic picture of the Sumatran tiger is pretty cool. So with that, Ken, I think we can go ahead and shut down and see if we have any questions, if we want to tinker a little bit.
Mark, maybe once you shut down, you can show Herb how to access those portfolios he wants to access.
Okay, yeah, we'll go ahead and do that. All right, thanks, everybody.